Tanzanian activists seek to block $500 million World Bank loan. IMF aid to Congo Republic on hold over Glencore and Trafigura impasse. And Zimbabwe freezes Chinese firm's account over currency manipulation. Thank you for joining us and welcome to Business Incorporated. I'm Chimezie Obi Iwagu. We get the show started with the markets, and global markets are taking a hit today as investors calculate impact of China virus. The markets in Africa are not insulated from that, as at midday Nigerian time, the JSE index had hit 2.51% down, leading losses in the region. The Nigerian stock index was down marginally. In Egypt, the EGX 30 was down 0.36%. Kenya closed lower on Friday, down 0.33%. In the Middle East, aside from the coronavirus scare, stock markets in the United Arab Emirates was hurt by a host of disappointing corporate earnings. The Abu Dhabi index declined 1.20% as First Abu Dhabi Bank, the country's largest lender, retreated 1.1% ahead of its board meeting to approve financials. In Dubai, the index eased 1.16%, with top lender Emirates MBD shedding 1.1% as it reported a 15% fall in fourth quarter net profit, which it blamed on higher impairment charges. Qatar's index slipped 0.87%, weighed down by a 0.5% fall in Qatar National Bank and lender Masraf Al Rayan, down 0.7%. Saudi Arabia's benchmark index traded down 1.30%, with oil producer Saudi Aramco losing 0.4%. And in Europe, stocks tumbled in early trade as fears over the economic fallout from the Chinese coronavirus outbreak intensify. Chesley Dolany is reporting from the Frankfurt Stock Exchange. Hello, Chelsea. Good afternoon. Well, China is ramping up efforts to contain the spread of coronavirus, but investors remain on edge. How are European markets responding so far?
Not well. As you can see behind me, the DAX has basically just been in a free fall this morning. It's down about 2% now. That's pretty much being reflected across most of European stocks. The French stock index, the CAC, is down about 2%. Euro stocks is also down about 2%. So investors are really heading for the exits here. As you mentioned, there's a lot of concern about what the economic impact of this could be. The Chinese government has said that they will extend the Lunar New Year for a couple more days. So that means that there's going to be more time of Chinese factories not working, of sort of plants and all sorts of businesses sitting idle. That could have a big impact, not just on the Chinese economy, but the global economy. And there's also, of course, concerns about what this will mean for commodities prices. We've also seen oil prices, metal prices, things like that falling. And that could also have, global impacts for Europe and for really the whole world.
So which industries in Europe are most exposed if the virus drags down China's economy?
The main reaction we're seeing so far, well, all of the stocks are down, but the most dramatic sectors that are being hit right now are really, for one, the travel sector. So airlines, companies like Lufthansa, the German airline, is down almost 4% today. Airline stocks in the U.S. as well. Plane makers, they're all falling quite significantly as investors sort of fear that this will lead to less travel. It's already led to a lot of trip cancellations, things like that. So that's one area where we're seeing a lot of impact. Another area that we're seeing a lot of impact is in the luxury goods sector. So companies like LVMH, they are all having really bad days in the market as investors fear that this will lead to less buying. Chinese, obviously the Chinese market is very big for a lot of luxury goods companies, and now there's a concern that they're going to be losing out on sales as the Chinese government seeks to contain the spread of this virus. So I think there's a lot of areas where we could see an impact, especially if you consider how exposed manufacturing sectors are to China. But for now, we're really seeing the most dramatic impacts in travel and consumer and luxury goods.
All right, away from coronavirus effects, let's look at what's happening in Italy. Government coalition got a reprieve after the center-left Democratic Party appeared to fend off a challenge by Matteo Salvini's far-right League Party in regional elections. How are investors responding to this?
Pretty well. I think this has been a big overhang for markets. This is a regional election, but it's been very closely watched because the fear was that Matteo Salvini would use this as a way to sort of break apart the governing coalition in the Italian government. So that coalition has been very fragile, and investors were very concerned that this would lead to a shakeup within the government. That hasn't happened. The votes are still being counted, but it does look like the Democratic Party is going to come away with a win here, and that really shuts down one of the routes for Salvini to sort of try and take power. So I think investors are happy to see that for now the coalition government in Italy is safe, but there's still obviously a concern that this could blow up at any moment. The coalition is quite weak. One of the parties, the Five Star League, has really lost a lot of support. So it's a win for today, but maybe not for the future. In terms of the market reaction, this has led to a pretty steep decline in Italian government bond yields. So investors are really piling into Italian government bonds, which I think really you can see how that is being driven by less fears of a government shakeup. But also the Italian stock index, the MIB, is down, but it's not down as much as the rest of European stocks. So investors are feeling a little bit better about the Italian political situation right now.
All right, Chelsea, well, it's the start of a new week. Let's continue to monitor the trend the market is going, particularly with the coronavirus issues there. Thank you for your time. Enjoy the rest of the day.